Good evening, students. Welcome back to this discussion on audit. In the previous session, we were left with some part of audit report. Okay, and it was about Caro that we were discussing. So today we plan to complete that part. Yeah, and as per the agenda, we also need to move on to our new chapter today. Okay, which is quite interesting, I would say. There are some different types of entities as around which some of the audit requirements are going to be covered. Okay. All right. So now quickly, if you talk about Caro, before we get on to the remaining part, if we do a quick recap of whatever we have discussed. So let's talk about Caro. So can you tell me what is this Caro? What is the requirement around Caro? So how do you define Caro? I'm not looking for the full form. I'm just more interested in understanding what would you mean by Caro? Yeah, what is the relevance of this? Where is this required? Why is this required? Yes, over to you quickly. So where do you think Caro is required? What is the relevance? What do you do in this Caro report? Or what you can say is this Caro all about? Yes, over to you. Everyone? Yes. As around the Caro, what are your thoughts? Quickly, huh? Waiting for responses. Great. I can see the responses coming up. Now, in respect of Caro, can we say that the Caro is more of a part of an audit report? Yes or no? Like Tambeshri mentioned that some of the comments of the auditor is what you can say is Caro. Of course, but in form of comments, where do you do this? So that is nothing but a part of the audit report. Yeah. So to begin with, we can say that Caro is nothing but an audit report. We can say a part of an audit report. Yes or no? Okay. Sanya says, wherein the users are informed regarding specific matters which are of significant importance. Yes. Again, you can say that, but along with that, you also need to add one point which Hardik has just mentioned. That's something which the regulatory requirement is mandating the auditors to do. Yeah, like Pallavi mentioned that wherein some of the compliances of the Companies Act you are doing. Okay. Now, if you look at Caro, so Caro talks about various points on which the auditor is required to specifically provide some responses as to whether the audit has been performed on that or not. And if the auditor has been performed, then what are his comments as around that particular area? Now, can you give me some of the examples which will get covered under Caro? Over to you. Some of the examples which you think will get covered under Caro. Over to you. Once again, quickly, if you can give me some examples of the areas. Okay, great. Tambeshwari says PPE, inventory. Then I think Hardik has added loans, deposits. Yeah, Ritika is saying intangible assets. Very good. Then I think Preeti is saying loans and advances. Again, very relevant point. Anything else? Okay, very good. So Pallavi says whether the company is performing the verification of inventory at the regular intervals. Good. Then I think Dilip says IFC. No, I won't say IFC is a part of the car. Yeah. So if you remember, some of the things that we covered were not related to IFC. Yeah. Sania says immovable properties. Yes, of course. Tambeshwari says in terms of the repayments of the loans, if there are some defaults, yes, of course, you can say that. Yeah. Okay. So Pallavi is talking about, again, I think in the form of loans. Nancy is saying physical verification. Yes, of course. That's there. Bhaskar is saying borrowings. Hardik is saying GST and the income tax requirement. I would say it's more about statutory dues from that perspective. Yeah. Then I think Preeti has added about the cost records, which Ritika has also given. Very good. All right. So great. So it's good to understand that some of the points that cover Caro, or which Caro actually covers, we have discussed, okay, broadly. Now what we will do is we will move further. We'll just look at some more requirements which are there under Caro, and as to how the auditors are required to deal with that. Okay. All right. So now moving further. So once again, what I'll do is I'll just move on to an audit report. Okay. And this time around, what I've done is I have picked up another audit report. Okay. So I'm not going to repeat all of those clauses which we have already captured. I'll just pick up some different clauses now. Okay. But quickly, if you just want to flip through, so as we understand that Caro is something you'll usually see as one of the annexures of the main report, wherein you will also see the reference of this Caro, which is given in the main report. Okay, so this cross-linking is always there. Yeah, something which you can also find here. Yes or no? Yeah. So this cross-link. Yeah. So something like this you'll always find there, right? And then as around the matters to be reported. So what will you have? You will have various points coming up. And please remember, all of these points which the auditor will report will again be within an order. Okay, so there will be an order in which those pointers will be given. That is in order of the clauses which are there under the Companies Act. Okay, so clause 1 will have to be answered first. Then clause 2 will come. Then clause 3 will come. And these clauses which I am saying are something which is specified under CARO. Okay, so it's not that this numbering has been changed by the auditor or any auditor can change that. No. So this numbering has to be in the same manner the way it is required under CARO. Okay. Now, as around CARO, I think we talked about it, that it will cover PPE, then inventory. Yeah. Then there are some of the areas in relation to loans advances, statutory dues, whether those are disputed or undisputed. Okay. Then it will also talk about loans advances, some deposits, okay, borrowings, cost records of the company. Yeah. So all of those things that we have already talked about. Okay. Then I think this is again the part around the statutory dues that we covered. I'm just flipping through some of these tables that we discussed. Okay. Yeah. So these tables, again, there's a format which is prescribed. Okay. So if you remember the previous session, the report that we looked at that had the same format. Yeah. So you will not find this format to be changing. Okay. Then moving further. I think we discussed up to clause 10. So let's look at this clause 11. Now, in this clause 11, auditor says no fraud by the company and no fraud on the company has been noticed. Now, if you remember, we talked about fraud reporting briefly. Yeah. So this fraud reporting is required to be covered by the auditor as part of his audit procedures. So what does it mean? Means whenever there is any fraud in the company. Okay, so it may have happened that company was involved in the fraud, means company has done that fraud, or maybe this fraud has been done on the company. Yeah, so whichever be the case, auditor is required to report on that. And when the auditor will report on that, auditor will also evaluate as to what are the implications of that fraud as far as the opinion of the auditor is concerned, as far as the truth and fairness of the financial statements, due to which he will have to evaluate as to how will he report that particular fraud in his main audit report. Okay, so I'm talking about the main audit report. Main means the document that we looked at first. Okay, wherein opinion, basis of opinion is given, modification is given, all of that part. Other than that, so whether that's been covered in the main audit report or not, Caro also requires this reporting. Means it is required to be reported in the main audit report. That will be dependent on the assessment of the auditor as well as in Caro. So you may be thinking, but sir, Caro is a part of the main audit report only. So why is this required? Because this is the specific requirement. Okay. And it's similar to any other area. For example, PP. So if you, as an auditor, opine on the financial statements, so you are reporting on PP as well, isn't it? But still on PP, you are giving a separate reporting, specific reporting under Caro. Yeah. So same is the case over here. Okay. Further, auditor says no report under subsection 12 of Companies Act. Now, whatever is that section has been filed in ADT4 as prescribed under the company's rules during the year and up to the date of this audit report, which is in respect of any resignation by the auditor. Then he says we have taken into consideration the whistleblower complaints raised by the company during the year, including any complaint up to the date of this report, because up to the date of his audit report, he'll perform the subsequent events. Some of those points he'll look at, right? Yeah, so he's saying I have not come across any such situation, right? Okay, then next clause talks about a type of NBFC, okay, Nidhi company. Nidhi company is again a type of NBFC. Now, he is required to comment, auditor, whether the company is a Nidhi company or not. Okay, and if this is a Nidhi company, then some of the legal requirements in respect of Nidhi company is required to report on that. Now, in this case, the company that we are looking at is not a Nidhi company. Means it's not an NBFC or a type of NBFC. So that's why auditor is saying that this is not a Nidhi company, and therefore reporting under this particular clause is not applicable. So can you see this point once again? Yeah. So every time whether the reporting is applicable or not, auditor is required to comment on that. Yeah. So you need to be very, very careful while reporting this. So you cannot say that because it's something not applicable, so I can just skip this clause. Or maybe I've looked at it, so that's why I'll not cover that. So if you do that, you will miss out. Okay. So if you miss out, then it will be considered to be an incomplete report. Yeah. Okay. So now moving further. In the next clause, auditor is again required to look at some of the compliances in relation to the transactions with the related parties, okay, as regards their disclosures, whether that has been done appropriately in the financial statements or not. Now, you may be thinking, but sir, reported uh, or to report this matter over here, will it not be a duplication because related party disclosure is the requirement of accounting standards? So the company would have done that anyways. Yes or no? So why is this that auditor is now again commenting on it? Because it is similar to any other point like we discussed. Okay. Next, clause 14. In this case, auditor is saying whether the company has an adequate internal audit system commensurate with the size and nature of its business. And auditor is also saying that we have considered the internal audit reports which were issued during the year up to the reporting date. Now, what was the reporting date? That was 31st March 2024. So all of those aspects as around the internal audit report, etc., auditor is required to look at. So auditor is just commenting on that, whether he has done that or not, and whether the internal audit system was appropriate or not. Okay. Yeah. So this is the next area over which auditor is required to comment upon. Fine. Moving further. Auditor is now saying that company has not entered into any non-cash transactions with its directors or the persons which are connected with the directors. Why? Because this is one of the requirements of the Companies Act, Section 192. Okay. So now this aspect, anyways, the auditor would have considered during the course of audit, but he is now specifically required to comment upon that. Yeah. Next. Now this is again more of relevant from the perspective of NBFC. Yeah. So now in this next clause, auditor is saying the company is not required to be registered as NBFC. Hence, the reporting under this clause is not applicable. Now, sometimes it may happen that you are auditing an NBFC. So for an NBFC, registration is a must to begin with to commence the business. So that's why this responsibility has been placed upon auditor. Plus, in some of the cases, what may happen is that even though the company is not registered as an NBFC, still it may be carrying out some of the activities which are relating to NBFC. Okay, which again is not appropriate, but that's why this has been considered to be an important area, and that's why this is again required to be reported upon by the auditor. Okay, then next clause. Okay, so now we are still on this 16 clause. Here again the auditor is talking about the NBFC only. So he's saying the group does not have more than one CIC. Now what is a CIC? CIC again you can say is a kind of NBFC. Okay, we don't need to get into too technicality as to what do you understand by CIC, what is the meaning of that. It's just that auditor is required to comment upon that. But in this case, please understand, auditor is not only commenting on the company. Can you see this? Auditor is commenting on the group. Group means all of those companies, holding, subsidiaries, etc. Yeah. He says subsequent to the year end means after the reporting date, one of the group companies has been additionally classified as CIC. Okay. So it may have happened that they have moved into that category. Yeah. So this is again a type of NBFC over which the auditor is required to evaluate and comment upon. Fine. Hardik is saying, sir, CIC is same as special purpose vehicles which the banks have, which the banks may have, or you can say which NBFCs may have, or which some of the companies may also have, which are not NBFCs or banks. Okay, so it could be there in any group. You don't know. Yeah. All right. Now, next clause. Auditor says company has not incurred cash losses during the financial year covered by our audit and immediately preceding the financial year. So what does it mean? That if the company has incurred cash losses, yeah, and which has also resulted in, let's suppose, erosion of net worth, then that is again very, very important. Why? Because this can have a question on the liquidity of the company. This can have a question mark on the going concern assumption of the company. Yes or no? Because if the company has been incurring significant losses year on year, cash losses have been going on year on year. Yeah, so that's why it becomes very, very important for the companies to look at it. And that's why it's very important for the auditor to consider this area. Okay. Further, he says there's been no resignation of the statutory auditors during the year. Right? Next. Now he's talking about financial assets. He's saying aging and expected dates of realization of financial assets. Now, what can be a financial asset? You can say trade receivable, for example. Okay, loans, advances, for example. And payment of liabilities, financial liabilities, for example, creditors. other information accompanying the financial statements and our knowledge of board of directors and management plans. And so he's talking about all the evidences which he has obtained. So he's saying on the basis of all of these things, yeah, so he's just explaining that I've looked at this information, I've reviewed this information, I've reviewed this data. Nothing has come to our attention which causes us to believe that any material uncertainty exists as on the date of the audit report, indicating that the company is not capable of meeting its liabilities existing at the date of balance sheet as and when they fall due within a period of 1 year from the balance sheet. We, however, state that this is not an assurance as to the future viability of the company. We further state that our reporting is based on the facts up to the date of the audit report, and we need neither give any guarantee nor any assurance that all the liabilities falling due within a period of 1 year from the balance sheet date will be discharged by the company as and when they fall due. Yeah, so auditor just additionally now commenting upon if there is any material uncertainty, means whether the company faces any liquidity constraint in terms of repaying its liabilities, or maybe in respect of dealing with the working capital requirements over a period of next 1 year, very much on the lines of the going concern assumption also. Okay, now moving further, now the auditor is saying that company has incurred losses during the 3 immediately preceding financial years, and hence the provisions of CSR are not applicable. Means if the provisions of CSR are applicable, then the auditor is required to report upon that as to how the company has dealt with that. But in this case, because the company is running into losses, so that's why what will happen? CSR will not apply. So if the CSR will not apply, auditor is again clarifying that CSR is not applicable. Huh? So let's not get into that. Okay. Yeah. And then once this specific reporting has been done, now because it's a part of the report which is signed by the auditor, you can say which is issued by the auditor. So that's why similar to what you see in case of main audit report, what will be there? Auditor will have to sign this. Yeah. So the firm details, place of signing, date of signing. Okay. Then the UDIN. All of these things will have to be captured in the similar manner like we do it in case of main audit report. But please remember that UDIN you will not generate separately for the main audit report for IFC or CARO. UDIN will be one. Okay, so UDIN will be one. So same UDIN you will apply for these audit reports. Understood? Yeah, everyone clear on this? Any questions around this? Quickly, over to you. Any questions around this if you have? Then we'll look at one example also. So then I think we can just look at one example around this. But if you have any questions, any doubts, please let me know. Over to you, quickly. Okay, so I can see this query from Hardik. He's saying, sir, like para 3 and para 4 are fixed for CARO? Yes. See, for CARO, you need to understand this is a legal requirement. So what is CARO? Companies Auditors Report Order. So you can say it's like any rule, any act, okay, any statutory requirement, wherein first of all you have paragraph 1, paragraph 2, paragraph 3, paragraph 4, or you can say clause 1, 2, 3, 4, or the way it's given in that. Yeah. So now over here, these two paras deal with this reporting requirement. So that's why these paras will always remain same. They will not change. And this is something which the auditor will also have to follow. Like this only. Auditor cannot change this. Understood? Auditor cannot change this. Yeah. Pallavi is asking, sir, what is meant by cash losses? See, cash losses, you can say, are the losses wherein the company is losing out on cash, okay, and which can pose a sort of liquidity constraint on the company. For example, I would say it's more of an accounting matter, but let's try to understand this with the help of an example also. See, when you go look at your P&L, okay, so in your P&L, let's suppose there's a loss, right? So what do you call that loss as? You may call it as book loss or accounting loss. Correct, Pallavi? Yeah. So if you look at the P&L, what will you call that loss as? Accounting loss. Now, when that accounting loss is computed, in that loss, if we go and analyze it, yeah. So let me just give you one example to discuss this. Now, as per your accounting, what will you do? As per your accounting requirement, you will have revenue. Yes or no? Then you will have expenses, right? Let's suppose one is COGS, right? Let's suppose you have employee cost, correct? Let's suppose you have interest or finance cost. So there's no order which I am following right now. And let's suppose there is depreciation. Okay. Then you get this expense amount. So let me just call this as A and this is B. Now, in this case, when you compute your profit or loss, let's suppose your PBT is a loss. So if your PBT is a loss, then what will you call it as? Losses. So instead of PBT, we can call it as LBT, means losses before tax. Yes or no? Correct? Now, if you analyze your P&L, in this P&L, there are various expenses. So this expense may have involved a cash outflow or may involve cash outflow in future. Means cash will go out. Similarly, employee cost, cash will go out. So why I'm saying may or may have gone out or may go out, because it may happen that in respect of these expenses, either the payment has been made or that will be made in future. Yeah, because you follow accrual basis of accounting, correct? Similarly, on interest, there will be a cash outflow. But if you look at one of the items like depreciation, now even though you book depreciation as an expense, will there be any cash outflow because of this? Will there be any cash outflow because of this? No, correct? So that's why when you are looking at your losses, okay, or these losses, what are these? These are accounting losses. Yeah. And let's just assume for the time being, let's assume that your loss was 1000. Let's suppose this loss was 1000. Okay. Which is after computing a depreciation impact of 100. Okay. So after computing a depreciation expense of 100, what did you get? A loss of 1000. Now in this case, what is the cash loss for the company? So the cash loss will be wherein you will add this. Yeah. So out of this total loss, what is going to be the cash loss for the company? 900? 900? Yes or no? 900. Correct? Yeah. So understood. What do you mean by cash loss? See, cash loss doesn't mean that every time a company will always evaluate a cash loss and not the accounting loss. Because for a company to evaluate the profitability, where do they need to go? They need to go to this. But if the company wants to ascertain the liquidity, so where do they go? They will also be looking at the cash losses. So that's where it becomes relevant. Understood? Yeah. And this is again important from the perspective of auditor because he needs to analyze this. Okay. Yeah. All right. So now I think I have one more query coming up. Sania says, sir, can you please explain this clause 21? Sure. See, anyways, this clause 21 is something over which we were to come after this example, but let's talk about this clause 21 first. So it says, if there are any qualifications or adverse remarks by the respective auditors in CARO included in the CFS, indicate the details of the companies and the paragraph number of CARO report containing the qualification or adverse marks. So, if in case any such adverse remarks are given in the consolidated financial statements, sorry, which in respect of the companies which have been included in the CFS. Yeah, so for those companies, what are those paras? Number one, and what are those qualifications? So that is something which is required to be reported upon. Next, it also requires the reasons to be stated for unfavorable or qualified answers. Yeah. So what is the requirement? It says where in the auditor's report answer to any of the questions referred to in para 3 is unfavorable or qualified. Yeah, so similar to what you see in case of a main report. CARO can also be given as unfavorable. Means if the company has got some misstatement in respect of some areas, and those areas are also the one over which reporting in CARO is required. Okay, so in such a case, what will the auditor do? Auditor will report that matter in the CARO also. And when he'll report that matter in CARO, so will he say that the company is appropriate in terms of that area? Tell me, will he be able to say that the company is appropriate in terms of that area or its accounting is appropriate? What do you think? No. Yeah. So in such a case, auditor's report shall also state the basis. Yeah. So every time there is a qualified opinion, or you can say modification in the main report. So what do you give? Basis. So similarly, if there is any comment over here or remark which is unfavorable, qualified, okay, so the auditor needs to explain for the same. Where the auditor is unable to express any opinion on any specified matter, his report shall indicate such fact together with the reasons as to why it is not possible for him to give his opinion. Yeah, and where will this arise? Where the auditor will not have been able, would not have been able to audit something. He has not been provided some information. Yeah, so that is where this sort of challenge may arise, over which the auditor is then required to comment upon accordingly. Understood? Everyone clear? Sania is asking, sir, the modifications can also be given in CARO. See, the modifications that we have discussed, Yeah, so those similar sort of modifications will not be here. Why? Because please understand, in Caro, auditor is not giving any opinion. Yeah, so please understand the difference. Huh? The audit report that we talked about, therein the auditor was giving opinion. In this case, it's not an opinion. It's kind of a checklist wherein a matter is picked up and auditor is giving his answers. So there's a question to which auditor is giving the answer, but that is not an opinion on that. Otherwise, what will happen? This will become a duplication. Okay, so that's why all those modifications, qualification, disclaimer, or that adverse, that is not something you'll find under Caro. And similarly, that is not something you'll find under Caro. Okay, in Caro, of course, the remarks can be negative. Negative means unfavorable, means auditor may say that physical verification has not been done, or physical verification was done and there was some discrepancy that was significant, which has also resulted into modification in the main report. Yeah, so such could be the adverse remarks which the auditor will address. Understood? Okay, now I think we can look at one example. Okay. Okay, so let's look at this example, and you need to then deal with this matter. You need to also help me understand as to how you will take care of this matter in the audit report. CA Ravi is conducting audit of a company for which reporting requirements under Caro are applicable. He finds that cash credit facilities amounting to rupees 4 crores were released to the company by the branch of a bank for meeting its working capital requirements. So what does it mean? Company has taken a kind of loan. He finds that out of the above loan, means this cash credit facility, rupees 1 crore has been used by the company for installing effluent treatment plant to meet the state pollution control board requirements. Okay. Now please try to understand this very carefully and let's not jump on to the solution. Now in this case, this rupees 4 crore is a kind of loan. Yes or no? Or you can say a borrowing limit. Cash credit facility is what? It's a kind of borrowing limit. Means a company can go to a bank and get this kind of loan sanctioned. You can say it's a kind of loan facility. Okay. Generally, when you go and ask for a loan, there's always a purpose which is specified. Until unless no purpose is specified. Generally, a purpose is specified. Now, what is the purpose? This was given for meeting working capital requirements. Now, working capital means for meeting day-to-day working capital, which would be more of in the nature of paying the current liabilities. Yes or no? Then, what has the company done? Out of this cash credit facility, company has utilized one part for installing a plant. So can we say that the installation of the plant is the working capital requirement for a company? Can we say that? Can we say that this is the working capital requirement? Quickly, what do you think? Can that be considered as working capital requirement? Aisha, Dilip, Bhavna, they say no. Very good. Yeah, Nitin says no. Now, in this case, okay, I think Busher also says no. Great. Anjali says no. Now, in this case, if you remember, in Caro, there is a reporting requirement for the same. Yeah. So now, whenever this matter will be dealt, what would you do? This will have to be addressed in Caro, therefore. Correct? Yeah. So let's understand as to how this will be addressed under Caro. Okay. whether during any point of time of the year, company has been sanctioned working capital limits in excess of 5 crore rupees in aggregate from any financial institution. Whether the quarterly returns or statements filed by the company with such banks or financial institutions are in agreement with the books of accounts, if not, give the details. Yeah, so that's the requirement. Now, so this is one of the requirements. Then this question also talks about one more matter. So let's look at that matter also, and then we'll look at the reporting which auditor will do in respect of both of these. Company has dispensed with practice of taking inventory of their inventories at the year end, as in their opinion the exercise is redundant, time consuming, and intrusion to normal functioning. Now what does it mean? Inventory take, what do you mean by this? Can you tell me? What do you mean by taking inventory? Anyone? Quickly. What do you mean by this? What do you? Very good. Inventory count. That's what Sania says. Tambeshri says physical verification. Very good. Now, as per the opinion of the company, so we are talking about the company, they believe physical verification is redundant, time consuming. Further, if this is done, so the normal operations of the company will be suffering. Of course, they suffer. There's no doubt about it, right? Now, let's try to understand what Caro requires in respect of physical verification. So Caro says whether physical verification of inventory has been conducted at reasonable intervals. Okay. Coverage and procedure of such verification, whether that is appropriate. Whether any discrepancies of 10% or more in aggregate for each class of inventory were noticed. Okay, so in respect of both the matters, we have looked at as to what is the reporting requirement. Now, in the given case, above requirement of physical verification of inventory by the management has not taken place. Okay, that has not taken place. And therefore, auditor should point out the same under CAR. Yeah. However, if you look at the other matter, in respect of other matter, Caro will require reporting if the company has been sanctioned working capital limit in excess of 5 crore. Now, the matter that we have seen, which we have observed, so did it involve any working capital limit getting sanctioned in excess of 5 crore? The answer is no. So that's why that matter is not something which gets covered by this. Okay, so do we need to say that this is not covered and hence not applicable? We don't know, because we are only looking at one of the transactions. Now, whether there were any other transaction which may fall under this reporting requirement, we don't know. So that's why we stay silent. But I think we should at least answer that, or we should specify as to how that has been dealt or why that has not been dealt. Clear on this? Everyone clear on this? Any questions, any doubts if you have, please let me know. Yeah, quickly. Any questions if you have around this? Clear? Anyone? Any questions? No question? Sure? Yeah, because I think this was all about the auditor's report, and which I believe to be a very, very important chapter. from the audit perspective. So I would suggest keep it, as an important chapter marked. Yeah. So every time you look for important. So I would say this is something which is important, okay, for your examination purposes as well. Of course, practically, whenever you go and audit, so you'll always find this area to be extremely important because eventually it comes down to the audit reporting only. Yes or no? Yeah. Okay. So if you have any questions, any doubts around this, let's discuss that. And then we'll move on to our next topic. Okay. We'll start a new chapter today. Okay, so any questions if you have, please let me know. So I think this question comes up from Tambeshwari. Tambeshwari is asking, sir, what is edit log? Okay, so I think you are talking in the context of the main audit report, correct? Okay, so let's try to understand about the audit, sorry, edit log. Huh? Okay, now what is an edit log? So Tambeshwari, if you can see, there's some working. Can you see this? Yeah, so currently on the screen, can you see there's some working? Yeah, there's some working. Can you see on the screen right now? There's some working as around the P&L, etc. Okay. And if you remember in the P&L, okay, we changed. Earlier, we wrote this item as PBT and then we changed it to LBT. Means earlier we wrote it as profit before tax and then we changed it to loss before tax. Yes or no? Yes or no? So we changed this. Correct? Correct? Tambeshwari? Yeah? Okay, now this change, can you still see? The answer is yes. Why can you see this change? Because this part, okay, we have not deleted. It's still there on the screen. Yes or no? And the change which has been made, that is also there on the screen. Or whether the new thing which is written against that or not, let's ignore that. But the previous thing which you have changed, you have not deleted that. Correct? Now, this is what you call as a log. Log means when you delete something from your books of accounts. So it should leave a trail. Means some mark should be there. Okay. It's more of something to do with the technology wherein that mark which remains, that something existed which has been deleted, that mark, okay, that trail, what do you call it as? Edit log. Okay, which could be in relation to deleting something or changing something. Edit means if you make any change. Yeah. So now for an example, let's suppose during the year an accounting entry was passed. So what was the accounting entry? Debtors debit 1000 to sales 1000. Or let me just change this amount. Let me make it as 1 lakh, or let's say 10 lakhs. Okay. Right. Let's suppose this was the accounting entry which was passed during the year. Correct. Now, Say at the end of the year, this accounting entry was changed. So what has happened? This 10 lakh has been made as 20 lakhs. Okay. Yeah. Now, how would you make this change? There are two ways. There are two ways to make this change. Either you can reverse the previous entry. So in the books, there are two ways you can record this change. Either you can pass a reversal entry. So if you pass the reversal entry, what will be the reversal entry? Sales debit to debtors. Okay, so if you pass the reversal entry, then of course, in the books of accounts, anybody can check. Anybody can go and look at the ledger. That in the ledger, first of all, sales were recorded at 10 lakhs, and then the same amount was reversed and new accounting entry was passed. So this is one of the ways to do this. Yes or no? Another way is you don't want to show this to anyone. Okay, you want to hide this. So that's why what do? For making this change, the previous entry you delete. Okay. Now, many a times this is done by the organizations. Why? They don't want to keep a record of some of the changes which they make. Maybe for any reasons. Huh? Maybe they want to manipulate or whatever be the case. Now, this edit log feature, if this exists in the accounting software or accounting package, let's suppose company is using Tally or company is using Oracle. So what will happen? Every time the company will delete such accounting entry. Okay. So the accounting system, that package will also offer a feature. What is that feature? That at the end of the year or at any point of time, you can just go and check what change was done. Okay. So that is what you call as edit log. Understood? Understood? Yeah, Tambe, should be clear on this? Right? Okay, so Kasak is asking, oh sorry, Hardik is continuing on this, so I'll answer first. Hardik is asking, sir, it cannot be disabled. See, it can always be disabled, and that is what the auditor needs to check, whether the functionality to disable it is there in the system or not. Yeah. So whether that is foolproof or not. So one is, can you have the edit log? The answer is yes. And whether that has been activated or disabled, because if that's been disabled, so even if this feature is there, edit log for that period till the time it remains disabled will not be generated. Bhavna is asking, sir, edit log करेंगे ही क्यों? No, so it's not edit law, it's edit log. Edit log. Okay. I think we are trying to get into a lot of technicality, which one is not required. So the term is what? Edit log. Okay, so this is the term. First of all, please understand this. Now, let's try to understand the usage of this. Let's suppose if you are the regulator, you want to check if the company has been making any such adjustments, any such manipulations. So what are the ways? You will want to go and look at as to what changes they have been making in their books of accounts and the reasons for the same. Maybe this was an erroneous entry, okay, which was not done willfully. It's a mistake, so they have rectified. Or maybe they have intentionally changed. Why? Because they wanted to inflate the sales. Yeah, so this is the reason behind this. Why this requirement was placed for the companies to have this feature. Understood? Yeah, so why is this required? So this is the reason why this is required and why the organization should have this. And that's why this responsibility has also been assigned to the auditor to go and check that whether the companies are maintaining this or not. Understood? Now clear? Yeah? Okay, Bhavna seems to be clear on this. Okay, then I can see one question coming up from Kasak. Kasak was asking, sir, if the question comes on Karo, then we have to write the provisions or the clause number. See, I would say it's always good. See, we have discussed about this. Like if there is any relevant auditing standard, or if let's suppose there is any specific provision. Let's suppose when you read Companies Act or when you read accounting, if there is any specific accounting standard, then what should you do? It's always better, means in terms of your presentation, it will always look nice if you can give the relevant provision, relevant para. But at the same time, you also need to understand the repercussions. See, it will look nice if you will give that, but if you don't give that correctly, then your marks may be deducted. Understood? Yeah. So till the time you are not sure, 100% confident, don't quote it. Okay. Yeah. So till the time you are not 100% sure, let's not quote it. Better not to quote it if you are not sure. Better you answer that this is what Caro requires. You forget the clause number, let it remain. Don't think that I don't remember the clause number, but still I have to add. No, forget about it. Yeah, because you need to make the communication to the examiner that I understand the concept and this is how this matter is required to be dealt with. Yeah, wherein you are not telling the examiner about that clause number or that para number, which is still okay. Yeah, because as an auditor, you are able to deal with that. References, of course, you can do later on. Okay, so that is not so important. Important thing is to give the correct answer. Understood? Okay, then I think one more query is there on the audit only, audit report. So Bashra Mohammed is asking, sir, how will the joint audit lead to lower cost? See, the joint audit will lead to the lower cost because of the fact that there will be efficiency. So let's try to understand now. Say there's a company. There's a company, yeah, which appoints, let's suppose, two auditors, A and company and B and company. Yeah, so these are the two audit firms. Now, let's try to understand the cost. Cost doesn't mean the fees which is paid to the auditors. That's not the only cost which a company incurs always. So on this audit process, over and above the fees which is paid to the auditor, do you think the staff of the company is involved on this audit process? Tell me. Do you think staff of the company is also involved on the audit process? Yes or no? Yes or no? Tell me, what do you think? Is that involved on the audit process or not? During the course of the audit, do they remain involved? Yes or no? Yeah. By providing the information, by staying engaged with the auditors, by answering their clarifications. Okay, so a dedicated staff from the client place is always working with the auditors. Yeah. So that staff cost is also involved. Okay, so the staff cost is also involved. Yeah. So if you bring in the efficiency in the work, so what will happen? Lower staff involvement will be required. If let's suppose they have got the required expertise, which one of the firm may not have, but by combining two firms, you get the expertise. So the quality improves, which again brings in the efficiency. Yeah. Plus, the other factor could be a healthy competition. So let's suppose if you assign one work to one person, as against that, if you divide amongst two, okay, because there's a competition, so you can always take advantage of that situation. Yes, there are various factors which can result in that lower cost. Okay, not necessarily always, but yes, of course, that may also be possible. Understood? Yeah, Mohammed, clear on this? Yeah, everyone clear on this? Any questions, any doubts? If those still remain, anything else that you have on this, please let me know. Then we'll move on to our next topic. Okay, so Mohammed is clear. What about others? Everyone clear? Any more questions, doubts? If you have, quickly, please. Any more questions, doubts? No? All right, very good. All right, so let's move on to our next topic. Okay, just give me a minute. I'll just open the other document now. Okay, so now what we are going to look at is different types of entities. Now, different types of entities means we'll look at lot of types. Of course, other than companies. By companies, we mean to say private limited companies, particularly, or you can say public limited companies, which are privately owned, means which are not owned by the government. Because the moment you say those are owned by the governments, so what will happen? They will become government companies, over which once again some of the specific requirements, some of the specific features, uh, kind of become applicable, and that is because of that reason has been discussed in this chapter also. Now, if you look at some of the types of entities that has been covered in this particular chapter, let's say for example hospital. Okay, now hospital is definitely a commercial entity, or this could be a company also, but at the same time, this being a hospital, this is subject to some regulations, yeah, or very specific type of regulations which you will not see in each and every type of company. Yes or no? Similarly, if you talk about a school, school is subject to some rules and regulations which you will not find in case of every other company. Okay, if you talk about, say, an NGO, NGO is non-governmental organization. Okay, something, you can say some type of organizations which are generally working for social causes. Okay, public welfare. Now, some of the features which are there in respect of these types of organizations, you will not find in case of a company. Yeah. So the point is that when it comes to such type of companies like NGO, like cooperative society, trusts, or some of the other entities which have been covered over here, every such type of entity involves certain features, involves certain laws and regulations. Okay, it's not only limited to the features, you can say they are also subject to some specific laws and regulations which are quite unique, or which are quite different from any other type of organization or any other type of entity. So that's why, what do we need to do? As an auditor, it becomes important for us to understand all of those aspects. Why? Because for an auditor, I think one thing is for sure, and of course, because you have covered a lot of audit by now, that till the time you don't understand the entity well, till the time you don't understand a proper understanding of their business, of the nature of their operations, of the economic environment to which they are subject to, do you think you will be able to perform audit in an appropriate manner? Tell me. Do you think you will be able to perform audit in an appropriate manner? Hardik says no. Bhavna, Tambeshwari, they are saying no. Okay, Nitin also says no. So some of you are saying no, which is good to understand. But can you tell me why it will be difficult or why it may not be as effective? So Ritika says, no, sir, understanding is a must. So can you tell me, so why do you think this understanding is a must? Okay, so what is going to be missing, or why do you think audit is not going to be as effective? Okay, so there we are. Hardik says, because if you don't understand an entity well, then how do you plan? How do you get into any audit program? Yeah, Ritika is saying, sir, in such a case, how do you design your audit procedures? Forget about their performance. You will not be able to even design your audit procedures. Okay, the part which you have not understood, if let's suppose you have understood in part and the other part you have not understood, so the part which you have not understood, how do you design procedures around that part? Will you be able to do that? The answer is no. You will not be able to do that. Correct? Yes or no? Yeah. Bhavna says, because if you don't understand the organization well, you don't know what actually is the purpose of the organization. Of course. Yeah. So it's like, I think it's very, very clear to everyone that without the understanding, you will be missing out significantly in terms of what is required to be done as an auditor. Means, as an auditor, you will be working in a lost world. Yeah, you don't know. So it's kind of unknown territory for you. You don't know what is required to be done, how is that required to be done. Why? Because you will just miss out and you will end up doing maybe little audit or half audit or say some part of the audit, and wherein you skip out, you skip some of those areas, some of those items. Correct? Yeah. I think same is the understanding from Dilip and Palvi. Okay, so now it's good to understand that you now are familiar with some of these basic requirements of the audit. So that's where the importance arises for us to get into a deep dive in a way in respect of these types of entities individually. So what do you mean by deep dive? See, as far as audit is concerned, now please remember, whether you are performing an audit of a hotel or an LLP or a private limited company or a public limited company or a government company, when it comes to audit of the financial statements of any type of entity, so always remember that the basic aspects of the audit that you have covered so far, they are not going to change. Okay. In fact, the way we have understood audit so far, there are four stages of planning, execution, conclusion, reporting, wherein you look at various requirements of auditing standards. So those are not going to change. Correct? So now what is going to change, or what is it that we need to understand when it comes to these type of entities? So let's try to get into that part. Okay, because you need to understand the context first, because till the time you will not get the context, you will not be able to apply that properly. Okay. Nitin says knowledge, experience, training. Yes, of course, it's there, but I'm just trying to be very, very specific in terms of now what is it that we are going to cover. Okay. Now, if we talk about audit, okay, in relation to anything, now in simple terms, in very, very simple, in layman terms, if I have to talk about audit, so what is the meaning of audit? In very layman terms, we can say that meaning of audit is to great. So of course, yeah, is to ensure that whatever was required to be done, whether that has been done in an appropriate manner or not. Can we say this or not? Tell me. I'm saying in very, very simple terms, to ensure that whatever was required to be done, whether that has been done in an appropriate manner or not. Yeah. If we have to just simply get on to the basic understanding. Yes or no? Can we say this or not? Yeah. Of course, there's a technical language, there's a technical definition. So I understand about the technical definition, but I'm just talking about a very, very basic understanding of the audit. Yeah. To ensure the things have been done the way they were required to be done by the entity. Okay. Now, yeah. So do you agree with this? Everyone, quickly, please confirm. Yes, everyone, are you there? Yes or no? Quickly, huh? Yes, correct. Okay, great. Now, let's try to understand broadly, huh? For an entity. Now, that entity could be of any type. For an entity, now, as an auditor, what do we need to know? That what is it that the entity needs to do? Yes or no? Whether that is in respect of financial statements or anything else, what is it that the entity needs to do? Now, for that, we can say, as an auditor, we need to ensure whether the entity has complied with accounting standards or not. Correct? So that is first part. Second, whether the entity has complied with required laws and regulations. Correct? And third, to apply auditing standards. Very broadly, can we not just divide entire audit, or we can say that audit is all about compliance of these three things? Tell me. I'm saying very broadly. Yeah. Can we not say that? Pallavi says prepare FS. Yes, of course. Preparation of FS is what? Requirement of accounting standards. Correct? Yeah. So can we say that? Yes or no? Yeah. No. So far, as we discussed, that all of these requirements around the auditing standards that we have been discussing in various chapters that we have covered so far. So what is it that we were discussing? We were discussing all about this part. Yes or no? Because accounting standards, of course, you'll cover as per your separate paper. Yeah. Now we understand that as an auditor, you need to ensure compliance of each thing: auditing standard, accounting standard, laws and regulations. Until the time everything as around the entity is not understood, so what will you do? You will not be able to perform the audit appropriately. Yes or no? So that's why it becomes important for you to also know about these laws and regulations. Yeah. So you should not think that now we are going to get into a new law paper or a new law subject. No. It's like you can say some of the features which are generally attached to some types of entities. Till the time we don't know that, as an auditor will not be able to consider that as part of our audit planning, and therefore will not be able to perform appropriate audit procedures in respect of those entities. So that's why now our focus is going to be what? Our focus will be more around this part. Okay, so this is the part that we are going to focus upon. Clear on this? Yeah, so that's the context we are going to now look into. Clear on this? Yes, everyone clear? Yeah, and we have also understood as to why is that important for us? Why is that really relevant for us? Clear? Okay, now some of the things that we just talked about, let's do a quick sort of, look into it. So some of the important things that you need to keep in mind while covering this chapter, because I'm sure this chapter bothers quite a lot. Yes or no? Yeah. So generally, when you get into this chapter, what is the general thought process? It's quite typical. Some of you think it's quite difficult. Some of you think it's quite lengthy. Yes or no? So that's the thought process or not? Tell me quickly. So when you talk to your friends, when you discuss this, so is that the thought process around this chapter or not? Tell me quickly, huh? Is that correct or not? Yeah? Yeah. So if you get an understanding as to what is that this chapter trying to cover, automatically all of that confusion should go away. So can you now understand that this chapter is not complicated at all? This chapter is only dealing with all of those entities in terms of their specific features. That's it. So in a way, you can say that when you will cover this chapter, so you will be able to get a better insight about these types of entities, all of these types. Okay, means you will get more clarity as around their constitution, as around their bylaws. If they have some committees, what are the control systems these entities have in place? What are the policies and procedures these entities are required to have, including the accounting policies? Okay. You'll also be able to understand more about their operations. Means how do they function? Yeah. What are the procedures in respect of their operations? Yeah. All about the maintenance of books of accounts, which all of these types of entities are required to have in place. Yeah. Which could be all about maintaining receipts and payments. Means instead of statement of P&L, you may get to see receipt and payment account, or you may get to see income and expenditure account. Yes or no? Yeah. So one can easily say that if you already have this understanding, now some of you may be thinking Sir, we already understand cinema hall. So cinema hall, tell me, do you understand or not? Tell me, everyone understands about cinema hall or not? What are the operations? What all policies and procedures they should have? How do they generate revenue? What are their expenses? Tell me yes or no. Yeah. So the only additional part you need to understand is some of the other features which are attached to that. The moment you get to know about it, so what will happen? So if I ask you any question around the audit of a cinema hall, so will it become too technical for you in that case? Tell me. So if you understand this industry or this entity well, so will you not be able to answer that question? Tell me quickly. Will you not be able to design your audit procedures for that? Tell me quickly. Yes or no? Yeah. So similarly, if we talk about a hotel, so now if you understand about the hotels, okay, in terms of their constitution, in terms of their bylaws, in terms of their control systems, their policies, procedures. Understood? Yeah. So that's the thing which you need to get into. Now clear on this? Yeah. So my whole idea to discuss this entire background and this thought process or this context is what, that you should just take out some of those, that pre-understanding which you carry, that this is going to be a very, very difficult part as far as audit is concerned. No, this is not typical, or this is not very difficult. Of course, there are going to be some regulatory requirements that we are going to discuss. Of course, those are going to come. Yeah. When I say regulatory requirements, it could be about constitution of the organization or some of the bylaws or laws and regulations. But those are not going to be too many. Those are not going to be too heavy or too significant. Yeah. Clear on this, everyone? Any questions so far? Any doubts so far? Then we'll move further on this. Yes, quickly. Any questions? Any doubts so far? If you have, tell me quickly. Any questions? Any doubts so far? Over to you quickly. Any questions? Any doubts? No? Sure? Niru, Nitin says no. Everyone clear? All right. So I think that then we can do, I think we can take a break now. Right? So now after the break, we'll move further on this. Okay. And the first part will be government audit. Means we'll talk about government. So we all understand about government anyways. Yeah. But we'll further do a deep dive of what government is. What are the government organizations? Okay. What are the various types which they may have in terms of carrying out their operations, and accordingly what all requirements are placed on the government or the government organizations in respect of audit. Okay, and who are the auditors for those government organizations, all of that stuff as around the audit. Okay. Yeah. All right, so let's take a break and then we'll continue. Yeah. Okay, Manish, we can take a break now. All right. Okay, so now we'll just start discussing about the government audits. Okay, I can see this query coming up. Okay, I think this is from Tambeshwari. She's asking, so in this case, I don't understand that an entity which is owned by the government included in special features of audit entity or not. You tell us that private and public company owned other than government is not a special feature of audit entity. So can you tell again for better understanding? Sure. See, the whole idea here is that if you look at some of these types of entities, now what are these types? The one which you can see right now on the screen. Yeah. For example, local bodies. For example, if you talk about cooperative societies, NGOs, similarly, government organizations, okay, and various others which have been mentioned currently on the screen. So we are talking about these organizations, Tambeshwari, only. So far, all the discussions that we have had, okay, when I'm saying so far, means all the previous sessions that you have attended, there are various things you have covered around on it. What was that all about? That was all about audit of financial statements. Yes or no? Now let's suppose there's a company or an entity. What is it? What is the nature of its business? Let's suppose it is in the business of an hotel. Say this is in the business of running a cinema hall. Now, for those companies or for those entities, how will you perform the audit? That is something that you have covered already in all of those sessions that we have discussed. Yes or no? Yes or no? Yeah. So, whether you talk about manufacturing entity, say trading entity, if you talk about hotel business or any other, the basic audit aspect will remain same. So now the point is that what is it that you are going to discuss now that you have not covered so far? So therein we discussed that some of the special features which you find in these type of businesses or in these types of entities or some of the rules and regulations which you only find in these type of entities, that is something we need to discuss. That is something we need to now cover, which has not been covered by us earlier. So again, it's not going to be a duplication. It's something which is required to be covered additionally. And why do we need to cover this additionally? Because till the time you don't understand all of these things, you will not be able to perform audit. Yeah, but at the same time, please also understand that if you understand the features of a company which is into the business of hotel, so will it help you in audit of a manufacturing entity? Tell me. So if you understand some of the special features which are there in case of a entity into hotel business, so will it help you on the audit of a manufacturing entity? Tell me. The answer is no. Yeah. So that is what you also need to now understand, that some of these features or some of these additional points that we are going to cover, that will be applicable, that will be relevant only for that particular entity or that business. Understood? Now clear on this, Tambeshwari? Yeah. Hope this answers your question. Yeah. Clear? Great. All right. So now as we discussed, we'll now be talking about the government organization, or you can say the government. Now, in relation to government, if you have to understand about the government, then government is not something you can say which is a small setup, or you cannot say that this is a very small entity, and you cannot say that government is limited to one type of business, isn't it? Government in itself is a very different thing, a very different concept as far as its constitution is concerned. Yes or no? As far as various bylaws or laws and regulations are concerned, as far as their powers are concerned. So, if you talk about policies and procedures for a government, so you will not find that to be in case of any private business. Yes or no? In fact, business is a term which you will not always associate with government. Yes or no? Yeah. For government, you will say that government is in the business always. Tell me, can we say that? Can we say that? That government is always in the business of something or other. Will it be right to say that? Tell me. The answer is no. Ratimalli says no. Yeah. For example, if you talk about state government, if you talk about, say, any government body, so maybe they are in the they are in the one should not say business. Their role, their activities are all about what? Administration of the country or that particular region or that particular state. Yes or no? So that's why, in case of government, this entire setup needs to be understood. And accordingly, we'll see that depending on the setup, depending on the structure which you have in case of government, what is it that you will be required to audit? So if the business is not there, then what are you going to audit? Correct? Yes or no? Yeah. So that is going to be completely different when it comes to government. Yeah. Okay. So now let's move on to some specific aspects around the government now. Okay. So we are not talking about the audit always. We are now talking about the government. Now, when it comes to the government, okay, by government, we can say we are talking about government entity as well as government organization as well as government. The main idea underlying the control in respect of the government is what? See, government is involved in expenditure. So when it comes to the government, as we discussed, that government is not really into any business. But do they get the receipts? Tell me. Does the government get the receipt? Yes or no? So can we say that government earns income? The answer is no. But do they get receipts? The answer is yes. And what could be an example from which they get receipts? Taxes. Yeah. So from the taxes, what do they get? They get receipts. Correct. And the receipts or the funds which the government gets, what do? They will spend that. They will be spending that, yeah, for various purposes. It could be a grant, it could be some capital expenditure, okay, or it could be some other expenditure. Again, there could be thousands of purposes as around those expenditures. Yeah, so when it comes to the government, what is it that we understand? Basically, there are two things. One, that is about receipts, and second, that is about expenditure. Okay, now Consolidated Fund of India. Now, what is this? Consolidated Fund of India or of the state. It consists of all the revenue received from taxes plus loans which are taken by the government, including the repayment of loans which are received by the government. Okay, so that is what you mean by consolidated fund of India. Okay, now after the expenditure has been incurred and the accounts are closed, the appropriation accounts are prepared. Now we are talking about the government. So when the government will spend an amount, incur the expenditure, close the accounts, so what will happen? The accounts that you prepare, they are subject to scrutiny by an organization. What do you call it as? Public Accounts Committee, PAC. And what does this Public Accounts Committee comprise of? It's a committee of selected members of parliament. Who constitutes this? This is constituted by Parliament of India. And what is the purpose? Purpose is for auditing the revenue and expenditure of government of India. So if there is an organization which will audit the government in terms of their revenue and expenditure, so which committee is that? Tell me, or which organization is that? That is PAC. Understood? Yeah? Okay. Now, moving further. Government auditing. So let's try to understand the meaning or the understanding of government audit. We can say that government audit is what? It's the objective, systematic, professional, and independent examination of financial, administrative, and other operations of a public entity. Public entity means a government entity, made subsequently to their execution for the purposes of evaluating and verifying them, presenting a report. Now, if that is evaluated, if that is verified, so after that, what will happen? There will be a report. Yes or no? There will be a report. So, presenting a report. Now, report about what? About comments on the audit findings, together with conclusions, in which there will also be recommendations. So, there will be comments, but for those comments, if let's suppose something is not done appropriately, so what are the recommendations for future actions? Okay, by the responsible officials, of course, whoever will do the government audit. And in case there's an examination of financial statements, then of course, if the financial statements will be examined, so there should be an opinion regarding the truth and fairness of the presentation. Correct? Yeah. So this is what we understand about government audit. So government audit can have two aspects. One, that is in respect of financial statements. Second, that is in respect of operations. Now, when it comes to the operations, you can say the expenditure, the revenues which they generate, plus there are various other activities that they do. So the government audit that we are now discussing, it's not only limited to the financial statements. Yeah, so that is something which is very, very important for you to understand. Yeah, so we are not talking about the financial statements only. We are talking about everything which the government will have and which is subject to some reviews, which is subject to some examination. Understood? Yeah. So some of the objectives we have already looked at. So what are the objectives? That there is an accounting for public funds. Now the government, when they are receiving all of these monies from taxes, etc. So there has to be some accountability, some accounting for those public funds. So how do you achieve that? Through the audit of the government, appraisal of government policies. Now, when the government audit will be carried out, so what will you do? You will also be evaluating their operational requirements, their operations, their management, the programs of the government, the policies, procedures which are laid down by them. Yes or no? As well as accountability of the officials who are administering them. Yeah. So that's why the government policies which are there, they will also become subject to reviews, scrutiny. Correct? Plus, this will also become the basis for corrective actions if those are required. Okay. So when you do government audit, so basically there are three objectives you are trying to achieve. One is that the money which is generated from the public, that belongs to the public. So you are setting an accountability for that. That is getting accounted for. Then you are also looking at as to what are the policies, procedures as around the government. And third, if at all there is any corrective action required. Yeah, so that can only be looked at, that can only be evaluated once you do this audit. Yeah, understood? Yeah. So clear on this aspect. Any questions so far? See, this may sound a bit technical to you, but if you try to understand with your understanding of how government functions or what government is, that is what you need to apply here. Tambeshwari is asking, factual data is what? Are you talking about this factual data? Yeah, so factual data means when you go audit something, so you look at the data, means you look at the facts which are there actually. So what is the data? Let's suppose during the year X lakh crores is the amount of taxes which they have collected. Okay, so that is what you call as factual data. Means data which is there in actual. Clear? Then I think Hardik has a query. He's asking, sir, IEPF and NAFRA audit will also come under government audit? No. See, they are something else. NAFRA audit is something else. But when it comes to IEPF, you need to tell me the full form of what do you mean by IEPF? Pallavi is asking, sir, what is this appraisal of accounting policies? Appraisal, you can say that government will have some policies, procedures. Yeah, so you are checking that, you are reviewing that. That is what you mean by appraisal here, right? Hardik is asking about invest. See, investor education and protection fund is actually a fund. That's not an audit. That's a fund. Okay, we are talking about audit. Audit means checking of something. To have a fund is not the checking. Understood? Clear? You can say that fund is subject to checking. That's a separate matter altogether. Ritika is talking about, sir, what about CAG roles? Yes, so see, we have just started. So there are a lot of things that are going to come up. We'll talk about it. Okay, Ritika? Yeah? Okay, so now, in India, the function of government audit is discharged by independent statutory authority of CAG. What is CAG? Controller and Auditor General through an agency. What is that agency called as? Indian Audit and Accounts Department. Understood? Yeah. So that's the administrative responsibility or accountability, you can say. Now, let's try to understand the legal framework and more about this CAG. Okay, now, Constitution guarantees independence of CAG. Now, CAG has to be independent, like every other auditor. That's the first and foremost requirement for the auditor. Yeah. Similar to what you see in case of statutory auditor, CAG again should be independent, means he should not be biased. At the same time, he should not be under influence of anyone. Yes or no? Only then he will be able to work properly. Yes or no? Yes or no? Correct? No. No. Because CAG has to be independent. So that's why he is appointed by the President of India. So that's the requirement of appointment of CAG. And shall not be removed from office except on the ground of proven misbehavior or incapacity. Means you can just not change CAG for any other reason. Okay, so there has to be a very proper sound reason if CAG has to be removed. Like as in case of judges of Supreme Court, CAG can be removed only when House of Parliament, means who will have to remove that? House of Parliament, and that too by a majority of not less than two-thirds of the members of the House. Okay. In fact, the Parliament will only decide salaries and other conditions of services of CAG, so that it is not disadvantageous to CG. Okay, so that they are not under the influence of anyone, because if they remain under the influence of anyone, so will they be able to function appropriately? The answer is no. The answer is no. Yeah, administrative powers of CAG shall be determined by president after consultation with him. Understood? Now, tenure. Now we are talking about the CAG here. Okay. Now when it comes to CAG, again there is a CAG Act for this. We call it as Comptroller and Auditor General's Duties, Powers and Conditions of Services Act 1971. Okay, that lays down a fixed tenure of office, prescribing that he shall be paid a salary which is equivalent to salary of Judge of Supreme Court. So it's like he is paid in a handsome manner. And that is again very, very important. Because if you pay CAG appropriately, then of course, some sort of, you can say, that concern that whether he will get influenced by money, that factor is also tried to be removed. Yeah. Okay. So that is the what is addressed. Okay. So now I can see a few questions coming up. Bhavna is saying, sir, who can be a responsible officer? See, responsible officers could be various. So that is something we are going to discuss for each and every type of entity, for each and every type of setup. Manoj is asking, sir, in government organizations, who is responsible to prepare accounts? That will again vary depending on the type of organization that you get to see. Yeah. Bhavna is saying fixed tenure. See, that is again dependent on that particular time as to what do they fix. As of now, it's not defined. Correct? Yes, Tambishri, that's correct. Right? Okay. Now, there are few constitutional provisions. So let's read through those provisions also. CAG shall perform duties and exercise such powers in relation to accounts of the union, states, any other authority, body, as may be prescribed by or under law made by the parliament. Okay, which we are going to discuss in more detail. Okay, yeah. Then, as around CAG, there are a lot of requirements. So let's try to discuss all of this. Now, what are the duties of CAG? Okay. Ritika is saying that it means that CAG has got nothing to do with political parties in power. So, if you are trying to say that they will not be influenced by them, then the answer is correct. Okay, and that's the objective. And that's why we are saying that CAG has to be independent. Understood? Yeah. Clear, Ritika? Yeah, clear on this? Quickly, huh? Great. Okay, now let's try to understand the duties of the CAG. CAG shall be responsible for compiling the accounts of union and of each state from initial and subsidiary accounts rendered to the audit and the accounts offices under his control by various persons. CAG shall, from the accounts compiled by him or from various persons who are assigned to him, prepare in each accounts showing under respective heads the annual receipts and disbursements for the purposes of union. Means where is it that the money is coming from, funds are coming from, and where are they getting utilized, where are they getting distributed. So that is one part to it. It shall be the duty of CAG to audit and report on all expenditure from Consolidated Fund of India. Remember Consolidated Fund of India? And of each state, each union territory. So who is auditing that expenditure? CAG. To audit and report all transactions of union, state. Okay. To audit and report on all trading, manufacturing, profit, loss account, balance sheet. Okay, which are in respect of any union or state. Yeah, so entire responsibility of audit is on what? CAG. Where anybody or authority is substantially financed. Now this is important for you because at times there could be some small questions based on this. Okay, so that's why it's important for you. Where anybody or any authority is substantially financed by grants or loans from Consolidated Fund of India or any state or union territory, CAG shall, subject to provisions of any law for the time being in force, audit all receipts and expenditure of that body. Okay, now, what do you mean by an authority or anybody which is substantially financed by grants or loans from Consolidated Fund of India? So let's try to understand that. That what is the meaning of this substantially financed? Yeah, so that is important to be understood. Where the grant or loan to a body or authority from this Consolidated Fund of India is not less than 25 lakhs. So number one, that grant or loan should be minimum 25 lakhs and amount of such grant or loan is not less than 75% of total expenditure of that body or authority, means to which it is given. Okay, in that case such body or authority shall be deemed to be substantially financed. Okay, now let's take an example to discuss this. So let's suppose there is anybody, there's an authority to which, let's suppose, a grant or loan of 25 lakhs is given. So that's the first condition. Along with that, what will you do? You'll look at the expenditure of that body. Okay. Now let's suppose expenditure of this body during the year was, so this is the amount of grant or loan given. Now, in this case, expenditure of let's suppose this authority is ABC. Expenditure of ABC during the year was 26 lakhs. Now in this case, can we say that the grant or loan given to ABC is at least 75% of its total expenditure during the year? Tell me quickly. Can we say that? Yes? Yes or no? Hardik says yes, Kasak says no, Tambeshwari says yes, Nitin says yes. What about others? Quickly, huh? Quickly. Can we say yes? Yeah? Sainath says yes, great. The moment you say yes, so what will happen? This will be considered to be substantially financed. So you'll say it's substantially financed. Okay. Let's suppose if we say that their expenditure during the year was 1 crore. Now, tell me in this case, will you say that ABC is substantially financed? Now, tell me. Hardik says no. Kambeshwari, Nitin, they are saying no. Kasak says no. Gurminder says no. Why? Because now that criteria of 75% has not been met. Yes or no? Yeah, great. So Pallavi and Rati Malini, they have also answered the same thing. Everyone clear on this? Yeah. See, these are like some of the small and some sort of specific provisions which exist. Yeah. Again, on the basis of which one can very easily make some small questions. Okay. That could be an MCQ, that could be a question. Okay. So that's why it's important, because some of the other points that we discussed, they are all generic. You need to understand that. But this is a specific provision which you need to learn, right? Now, next part is about the audit of grants or loans. So, of course, that is required to be done. Yeah, so that is required to be done. Audit of receipts, we discussed, this is required to be done. Similarly, CAG shall have the authority to audit and report on accounts of stores and inventory. Stores and inventory which is kept in any office or department of union or a state. Okay. Yeah. Ritika, I'll come to this point. Maybe towards the end of the session, I'll come. Right? Okay. Now, similarly, you may also see some of the government companies. Now, what is a government company? Government company, you can say, is a company to begin with. So, means it's incorporated or registered as a company and which is under the control of the government. Okay, so if there is a company which is registered as a company, of course, then you will call it as a company and which is under the control of the government. So in that case, what do you do? If you look at the duties parts of CAG, now their audit means audit of government companies, that is required to be performed in accordance with the requirements of Companies Act. Why? Because it's a company. It's a company. So that's why it's required to be audited by as per the requirements of Companies Act. Vedant, I'll come to your query. Okay. Now, because it is subject to audit as per the Companies Act. So what do you need? You need to appoint the statutory auditor, like you discussed in previous sessions. You go appoint a statutory auditor. So who appoints that? Board of directors. Correct? But in case of government companies, I'm not talking about any state or any government organization. I'm talking about government company now. In case of a government company, that auditor, who will appoint that? CAG will appoint that. So whether it's the first auditor or the subsequent auditor. Who will appoint that? CAG will appoint that. Okay. And CAG may also give some directions to that auditor in respect of audit of financial statements. Auditor is also required to report to CAG. Yeah, so when the auditor will perform the audit, auditor is also required to report to CAG. So this part again we will cover in more detail as we move further. Understood? Yeah. Okay, now Vedant has a point. Vedant is asking, sir, can a chartered accountant become a CAG? See, for a CAG, the criteria is not that of a chartered accountant. Yeah, so you can say it's more of a government official. So that's why there are some tests, there are some criteria, eligibility requirements which the government will, which government specifies. Okay, so the person who meets that criteria then will go through those exams, those sums, all of those eligibility criterias which are specified. Once that is fulfilled, that is how you get appointed as the CAG. Okay, because CAGs are not too many. CAG is only one. Okay, clear? Vedant, clear on this? Yeah. Now we looked at the duties of CAG. Now let's look at the powers of CAG. Now, because there are some duties assigned to CAG, so that's why it's very important for the CAG to have some powers, because without the power, if you assign duty, then how will those duties be executed? Yes or no? Now, what are the powers which have been given to CAG in relation to performance of his duties? Following powers are given to CAG: to inspect any office of accounts under the control of union, state government, including the office responsible for creation of initial or subsidiary accounts. To require that any accounts, books, papers, other documents which deal with or otherwise relevant to the transactions are under the audit. Okay, so he can always ask for that information, ask for those documents, ask for books of accounts. Okay, CAG can put across questions, make observations which he thinks is important. He may call for such other information which he may require. Why? For preparation of any audit or sorry, for preparation of any account or any report. Okay, for which the duties are assigned to CAG. In carrying out the audit, CAG also has the power to dispense with any part of detailed audit of any accounts or classes of transactions, and to apply such limited checks in relation to such accounts or transactions. Okay, so CAG can go inspect, that is one. CAG can ask for any information. CAG can ask for books of accounts, any other records. And in carrying out the audit, means if let's suppose the audit is going on, if any further information as around any classes of transactions, any processes, any of that thing is required, so that can also be something which can be carried out by CAG. Clear? Any questions so far? Over to you. Any questions, any doubts so far? Tambeshwari is asking, CAG is a one person that will do all the things. See, CAG, you can say, is one person under whom there is a full office. Okay, so there's a team of CAG. So CAG as an individual is responsible for all of this. But he will have a team, he will have an office. Okay, he will make these persons work. Through those persons, with the help of those persons, CAG will do this. Understood? Yeah? Clear? Any more questions? Quickly. Any more questions? Any more doubts? Yes, Ritika, I'll come to this point. Sure, I'll come to this point. Bhavna says, sorry, Bhavna is asking, sir, power to dispense means power to carry out that work. Okay. If let's suppose you are given a duty, let's suppose you are given a duty that go and check that office. Let's suppose Bhavna, you are given a duty. What is the duty? That go and check that office. In that office, everything which is there, you can just go examine that information. Okay, so that is the duty assigned to you. Now for this duty, you need to have the power. Okay, so let's suppose you need the power. What is the power required for? You can go there. Nobody will stop you. The information that will be asked, that will be provided to you. So that is what you call as power to dispense that. Okay, to carry out that. Understood? See, treasurer and all of these are what various types of government officials. And for getting appointed or for some of these roles and responsibilities, there are different eligibility criteria. Not really relevant to this discussion of ours. Yeah. But of course, if you want to go understand how are they appointed, what are the criteria, what is the eligibility, you can always do Google, check that up. Maybe for your knowledge, if you want any specific thing. Sure. Clear? But as of now, you can just simply say these are all what? They are all government officials. Okay. Now, now we'll touch upon this next point, and that is about expenditure audit. See, when it comes to the government, okay, we are talking about government right now. We are not talking about government company as such. We are talking about government. So when it comes to the government, so the government means there are two things. One, you get the receipts or the funds, and second, you spend that. Okay, so that's why a very important feature as around the government or the government audit is about the audit of those expenses, audit of those expenditures of the government. Yeah, because what is the responsibility of the government? To spend money for the infrastructure, for public welfare, for various projects. Yes or no? Yeah, for running the administration. These expenditures are required. So that's why one of the important thing which is attached, or you can say one of the features which is attached to the government audit, happens to be the audit of government expenditure. Yeah, a very important part around this. And for executing this, you can say, yeah, this can again be bifurcated into few parts. This expenditure audit, or you can say the government or the audit of government expenditure. One, you can say it's about audit against rules and orders, audit of sanctions, audit against provision of funds, propriety audit, and performance audit. So what we will do is, once you read through all of these, you can say these are the ways or some of the audits that you perform in respect of various expenditure. So when you look at all of these collectively, what do you call it as? Expenditure audit. Or you can say for expenditure audit, there are these different types of audits which are required to be done. Okay. Yeah. So now, I think we'll not be able to look at each and every type of audit right now, but quickly, what we can do is we can just look at this first part, audit against rules and orders. So what does it mean? What does it cover? So audit against rules and orders aims to ensure that the expenditure conforms to relevant provisions of the constitution. Means they are in line with the rules and the regulations under which they should be in place. Means whether they comply with the relevant legal regulatory requirement or not. Yeah. if you look at the financial rules, regulations, orders which have been passed, whether those expenditures were complying with all of those requirements or not. Yeah. These rules, regulations, orders against which you perform this audit mainly fall under following categories. Now, what are those categories? Rules and orders regulating powers to incur and sanction expenditure. So, what do? First of all, when you incur any expenditure, so let's suppose if you are the government and you incur some expenditure, so that needs to be sanctioned also. Yeah. So, that is something will have to be checked. Rules and orders dealing with mode of presentation of claims means how those claims have been presented. Withdrawing monies from various funds, okay, which could be related to contingency fund, public account, states, yeah, so various types of government purposes. Rules and orders regulating conditions of service, okay, it could be in relation to anything, yeah. It is the function of the audit to carry out examination of all those rules. Now, in this part, what is it that we are trying to look at? You will have to go and check those rules, regulations, and orders which are issued by the relevant executive authorities to see that they are not inconsistent with any provisions of the constitution or any laws. Number one, they are consistent with essential requirements of audit and accounts. They do not come in conflict with orders of or rules which are made by higher authority. In case they have not been separately approved by the competent authorities, the issuing authority possesses the necessary rule. Means as around that particular expenditure. In nutshell, in crux, what is it that you are trying to check? Whether that is in compliance with the relevant law or regulation or not. If that is the case, your first part as around the expenditure audit is completed. Means you are going by the rules, any order which should have been in place. So that's why as an auditor, if let's suppose you are the CAG, so what do? You go and check that rule, that order or regulation. Now you may be asking, sir, what is that rule? What is that regulation? What is that order? So every time for every type of government process, for government activity, for government function, that would be defined. So you go check that and you ensure that the expenditure is in line with that. Understood? Understood? Yeah. All right. Any questions so far? Pallavi is asking, sir, do we need to have the knowledge of all of these? No. In fact, this knowledge is not provided to you. You can't get into that. Yeah. Because those will be like, lacks of policies and procedures. Not possible for anyone to get into. It's just that you need to understand the methodology that is required to be followed. Okay. Now, I understand you have one query, Ritika. Okay. Coming back to your point. See, substantially financed means if let's suppose a loan is given to a party, okay, so that party will be considered to be substantially financed when two conditions are met. One, that amount should be minimum 25 lakhs. So that is the first criteria. Okay. Number two, let's suppose during the year that party has spent X amount in totality. Then this loan amount or the grant should be at least 75% of that. Say, for example, that party during the year, its total expenditure is what? 10 crore. Okay. Now, if you want to say that this party is substantially financed out of what? Out of consolidated fund. You can say substantially financed by government. So what is the criteria? 7.5 crore at least should be the loan or grant that goes from this fund. Okay. The moment you do that, So this second condition of minimum 25 lakh will also be met. Yeah. And that's when you say it's substantially financed. Clear, Ritika? Clear on this? Yeah. Clear on this? Yeah, so some of these terms, and don't worry, we'll get on to all of these discussions. See, as of now, we don't plan to move further. Of course, any questions, doubts that you may have, we can discuss that. Yeah, so some of these quasi judicial, all of these things will cover as we move further. We are not yet done. We'll come on to all of those points. Malu is asking, sir, government audit, how it performs. Auditor will make audit separately or in combined manner. See, all of these are defined by the purposes. For expenditure, there will be a separate audit. So that's how it's done. Okay. We'll look at some examples also. Yeah, definitely. We'll look at some examples. Yeah, as of now, please understand we have just started. Okay. We have not been able to get on to most of these points. Yeah. Okay. Any questions, any doubts? Tell me quickly. I'm just hoping. Okay, so Ritika is clear on this. What about others? Any questions, any doubts? Hardik is asking, sir, like after someone audits government company, then again CAG will audit? No. So that's a different requirement altogether. So there are some steps to that, but that is more of in relation to financial statements. So I'll come to that point. As of now, you can just simply say that when it comes to the government audit will be carried out. And for government audit, one part is just what we have discussed, only one part. We have not yet completed that. I can see a few queries around quasi judicial. See, quasi judicial, you can say, will be something which is similar to judicial. Okay. Now, how is that going to be something similar? We'll talk about it. Okay. Tambeshwari is asking, sir, on the financial year budget issued by Parliament on February is prepared by CAG? No. See, that's not prepared by CAG. The point is that when, let's suppose, a government comes up with the budget, okay, and government spends that during the year. So that expenditure is what CAG will audit. So that's the thing. Understood? In that case, government will lay out the criteria. So this is how they will spend, this is how they will spend. So whether that has been done in that manner. Yes, Hardik, you are absolutely correct. So Hardik is saying quasi judicial, we can say entity is having similar powers as that of civil court. Yes. Okay. So I think we can just close our discussion over here. As we discussed that we are not yet done. Okay, so there's a lot to follow even on this government audit part. We are not yet done. But my request, it's very important that you please revise whatever we have discussed. Okay, because we'll have to continue from here. And this is a sort of, slightly, I would say, a topic wherein your understanding in respect of all of that we have covered is important, because if you miss out on that, then you will not be able to catch up. Yes, that's very, very important. Okay. So we can just close our discussion. Any questions, any doubts? Tambeshwari is asking, after applying expenditure and receipt audit by CAG? Yes. And after that, what is going to follow? It's like CAG will issue the report and will also give the recommendations. All of those things we'll talk about. Okay. We'll talk about all of those things. Yeah. So, all right. Thanks, everyone. I think we can just close our discussion with this. Right. So, thanks, everyone, once again for your time today and for this wonderful participation. Thanks so much. And in the next session, we'll just continue with this. Yeah. Thanks. Yes.